All right. Hey, what's up, everyone? Like, welcome back to the Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
Not much, man. How you doing?
Doing good, man. Well, let's talk about this market, man. This week, the market came in some cautiousness, man. I mean, I feel like we kind of flirted with a little bit of new highs, and then the market kind of reminded everybody real quick that tech doesn't always go up. If you look at the tech this week, ooh, tech doesn't always go up. Fed week had traders on edge. I'm telling you, like everybody was on edge. AI names caught some smoke. And we could if you pay attention, also money kind of rotated a little bit into value and some small caps. So just I don't know if you guys saw that. So some money kind of moved a little bit today. So again, if you look at Monday, how the week opened up, it was all about patience, man. I don't know if anybody traded on Monday, but there was no chasing, there was no FOMO. Wall Street pulled back a little bit, as we were waiting for the Feds. Everybody was just like chill, you know what I mean? Like there wasn't a lot of volume, everything kind of cooled down, you know what I mean? So I think everybody was like, nope, I'm not making big move until Mr. Powell speaks. So everybody kind of just chilled for a little bit, you know what I mean? So, but you see Tuesday, I mean, the tension kind of was thick a little bit too, because everybody knew the rate was coming. And I think, Wale, you talked a little bit about it too. It's like, is it going to be 50? Is it going to be 25? But market kind of chopped a lot near the highs. I mean, we didn't really fly, but it was just kind of flirting with that new high. Tech was still really shaky also. And everybody was over analyzing what the Fed is going to say. Like, I felt like everybody was in a group chat together just talking about, like, what's the Fed going to talk about? So, I mean, again, everybody were kind of like positions, but not comfortable, right? So, and then Thursday, Thursday was actually good for the market. If you look at the Dow Jones and the Russell 2000, they both kind of like went a little bit high, which it tells you something important. It just wasn't the tech participating in the market going up this time. It seemed like a lot of the other names also participating a little bit, right? And then we had the rate cut on Wednesday. I don't know what to make of that move we had on Wednesday because again, I feel like we talked about this a little bit where we mentioned that the a lot of the move that we had over the past month might already be priced into those moves. Because now you can see evident by IWM kind of like, we had like a little pullback today. So again, man, the cut was expected. Guidance is what matters. You know what I mean? AI names still leaders, but valuation is kind of coming under microscope. Like we look at Oracle, look at AVGO today. Some of those names got smacked. So again, reported good numbers, but for some reason they got smacked still. So let's talk about it, man. Let's get your opinion on this market move for this week.
Yeah, if we look at the last 2 weeks from a technical standpoint between QQQ and SPY, we haven't really gone anywhere. So
Yep.
if you look at QQQ, we've been stuck in this range between 629 and 611, and we've kind of stayed in that range. This is for the last, call it 10 trading days. And if you look at SPY, that range was also a little bit tighter. Let me go back to my chart I was looking at. Yeah, 689 to 679. We stayed in that range over the last 2 weeks. But if you look at IWM was actually the leader of the indexes over the last, call it almost 3 weeks. And
Mm-hmm.
that was the one that made a new all-time high this week. And then if you look at the RSP also today made a new high all this week. So what that tells you, as you mentioned earlier, is you're seeing a little bit of a rotation out of high beta tech into some of the laggards that we've seen over the course of this year. So you're looking at some of the value plays, you're looking at the small cap plays, etc.
Mm-hmm.
Broadcom and Oracle's earnings reports did not help technology at all this week. A lot of the other names that, you know, didn't report or didn't say anything caught strays, like AMD
Yep.
caught a stray today. You know, TSM caught a stray today. Yeah, so there was a lot of names that just basically caught strays today, and you saw like financials started to do pretty good.
Mm-hmm.
So
Mm-hmm.
I think that again, as we get closer and closer to the end of the year, and as the expectations of what people are expecting technology and all of these high hyperscalers to deliver, if you don't deliver, you will be punished, and people are going to start, moving money out of, those sectors into other places.
Yep.
So I'm not surprised, um, but I will be interesting to see what will happen over the next, I'd probably say month or so, once we start rolling it over into Q1, because some of these names, like, the NVIDIAs, Microsofts, Amazons, Googles, people might start saying, okay, here's my time to maybe get it at a better price, and maybe we'll start seeing
If some
those
moves there.
stocks start getting bought. So
Yep, yep.
we'll just have to be patient and see what happens.
Yep. And as I mentioned, man, the rate cut was expected, right? Market kind of already priced that in. I mean, that's why we didn't see fireworks, when Jerome started speaking and stuff. So what does that mean for the market? So a cut just means borrowing gets cheaper, right? Mortgages, I mean, maybe not mortgages. We talked a little bit about that. Credit, corporate loans, all that kind of like loosen up a little bit. But here's the thing, that doesn't really like, I guess, help with the mortgage and stuff. So are we seeing quantitative easing, especially when the Fed is buying like $40 billion worth of bonds? Like, are we seeing that happening a little bit? Is the market is the Fed basically stepping in and providing liquidity for the market? Like,
Correct. Yeah. So to me, I think some of the things that the Fed has seen in the jobs report, I'm pretty sure they've seen what's been going on in the private credit markets as well. And I think what they're seeing is that we need to give a little bit of stability and relief to markets. So they said that they're going to be purchasing $40 billion worth of bonds. So
mm-hmm.
basically, what that means is that they're taking bonds out of the market and injecting cash into the market. So banks who own bonds, corporations that own bonds, those are going to be the institutions that are going to be benefiting from that liquidity injection into the market. And when you get liquidity into the market, that should help stabilize things. Because one of the things I posted a video on my Instagram today, we live in a credit driven economy.
Yep.
And if credit doesn't work, or if credit is too tight, the system falls apart.
Mm-hmm.
Because when you look at how much credit is in circulation versus how much actual physical money is in
Money.
circulation, there's way, 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 way more credit in circulation than there is actual money.
Yep.
So, because of those two things, when there's a lot of friction, the Fed sometimes will step in and say, okay, we need to kind of ease things. People call it printing money. It's not, they're not printing money. Like,
Mm.
I really
But
hate
there's
that
no actual
word.
money being printed.
They're
No.
not printing money. No, they're injecting more circulation of currency into the markets.
Uh-huh.
So to me, that should be a benefit to stocks over the next couple of months.
Right.
Now, I'm not saying that, I don't know. I didn't get the details of when they're going to start buying those um, bonds,
Mhm.
but the goal is to stabilize the credit market. So,
Right. Right. Right.
I think it'll take some time, and that's why I remain bullish, because again, they're not tightening anymore.
Right.
They're starting to ease a little bit. So
Right.
I would be bullish on stocks between now and Q1 of going into next year. So we'll see what happens.
Right. And people got to remember too, like the Fed doesn't just like buy bonds because everything is right, right? They're buying it because something is under pressure, something on the
Hmm.
surface under pressure. And then, like you just mentioned, credit is under pressure. You know what I mean? Like there's something going on that needs support. So that's why they're buying all these bonds and stuff.
Yeah. So, and if you look at, I was just going to talk about Oracle. Oracle's bonds were,
Mhm.
considered high grade investment quality bonds, and you look at how it's trading now, it's
Yep.
starting to look like junk bonds now. So
Yep.
when you see stuff like that, the Fed pays attention to things like that. So
Yep. 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 Well, let's talk about Oracle, man. Oracle used to be that quiet, heavy, not so flashy stock, not so sexy, dependable. You know what I mean? But this year, if you guys look at Oracle, it's just been going like crazy. But again, this week, Oracle got humbled a little bit. You know what I mean? But the dip is for repricing, or is more for like, something is going wrong under the hood. You know what I mean? So let's talk a little bit about Oracle and what they reported and what they're saying there in their earnings this week.
so we talked about this a couple quarters ago when they
We
reported.
literally did when they bought that.
We
Yep.
said Oracle has now set the standard here. And if they miss, and if they cannot deliver,
Yeah.
they will be punished. Now, I will say this, the punishing of the stock happened before even they reported. Because one of the things that people got nervous about was they had all of these high expectations from their last earnings report. I think, what date was that? Let me go to my chart. That was on, yeah, September 9th. They set the bar so
So high.
high.
Yep.
But what ended up happening is, in order to hit those expectations, they had to start borrowing money. So the
Mm-hmm.
money wasn't coming from free cash flow. It wasn't coming from their balance sheet. So when investors saw that, they said that's a red flag. And that's when Oracle started to move lower.
Mm-hmm.
Then they reported this week, and I think they missed on revenue.
Yep.
So, and I think what I'm hearing is that there are going to be some delays with some of their data centers that were supposed to come on board in 2027,
They're
but
2028 now.
now they're pushing it to 2028. So I always say this, if you are an individual stock owner and you are, you know, owning a piece of a company, this type of information is important because what does it tell you? It tells you that the narrative or the story has now changed.
Yep.
Now you need to reassess. Are you going to stay in the stock, or are you going to say maybe this is a buying opportunity and this is overblown and I'm going to, stay in the stock, or am I going to get out? Because I said the
Yep.
same thing about Oklo, right? When the narrative on Oklo changes, I have a decision to make.
You have to change it.
Do I stick with it? Do I trim some of my position? Do I de-risk a little bit? So this is why it's very important. If you're an individual stock owner, you can't just be investing blindly, because when some of these things happen, you need to be in tune to, okay, do I need to make a decision,
Yep.
or am I going to just kind of, let things go as they are?
Yep. I don't think Oracle is broken, right? I think it's just a market just reminding everybody that the AI story is just beginning, right?
Hmm.
And if you are, you know, not able to meet certain things, right? The market has high expectations for these stocks now, like really high
Correct.
expectation. And Wall Street is not doesn't like when you don't meet the expectation. It's not because you're a bad company. It's just like they expect you to do this, but you did this, which is
Correct.
not bad, but
Yeah.
they're like, yeah, you didn't meet our expectation. We
Correct.
thought
It's
you were
like,
gonna blow it out the water.
I can't give you an A when you're performing at a C. So I
Yep,
can't I can't price you at 300 when, based on what you're doing, I
yep.
should be pricing you at 292, or 212, or whatever the price, stock of the price is.
Right, right,
Yeah. So it's just, to me, it's a repricing of what the actual value of the company is now that the narrative has changed.
right. And like I say, is it a broken company? I don't think so.
No,
Like
I
I
don't think
think I
so.
think the narrative's still there. I think Oracle's still a good company. It's just now, it's just like expectation needs to be met now. You know what I
Hmm.
mean? Like so you really need to be able to get to that expectation. I mean, AVGO stumbles after earning. You know what I mean? Same thing. Like, their sales from AI chips are actually set to double with like $73 billion backlog, right? That's big, right? But again, same thing here also, like expectation. Everybody wants strong results. Everybody wants to see a company beat. Everybody wants a company doing profit and meeting the expectation, right? So at the end of the day, again, did AVGO or Broadcom, did they fail? I don't think so. I think we all seeing this repricing now of those stocks too. So let's talk a little bit about that, man. And what's your thoughts on the AVGO reporting and stuff?
Yeah. So on AVGO's report, I think they beat revenue, they beat on EPS.
Mm-hmm.
But the problem was, I think, because the stock was up initially after the numbers came out,
Right,
but then
right.
when the call started, I think what the thing that triggered everybody to kind of get scared was they talked about margin compression. So the margin compression discussion scared a lot of people. And again, we remember this happened with Nvidia. As you as you continue to deliver, especially for high beta stocks like technology, as you continue to deliver consistently over a period of time, the expectations continue to rise.
Nice. Yeah.
So if there's any, because again, AVGO hit an all-time high of $414 a share. So as those expectations continue to rise, you have to continue to deliver. And because they didn't necessarily deliver on all fronts, analysts will get to a point where they will nitpick and they'll find, things in your earnings report where they say you're not worth this price anymore. I
Yep.
always give the
Yep.
example of, an NBA player who is used to averaging 35 points a game, right? And then he goes into a new contract negotiation, and let's say over the last 2 years, his numbers have now jumped from 35 a game to 28 a game.
Mm-hmm.
Those are still good numbers, but the team is going to be like, I can't pay you max dollars when your production has now decreased.
Yep.
I will still pay
Yep.
you, but I'm not going to pay you max money.
Yep.
So right now, we'll just call it ABGL is not worth max money right now. So I would be looking at, to me, if you think about it from a long-term standpoint, I would be looking at it from that view and saying, okay, maybe this is an opportunity for me to get into a good company at a better price.
Yep.
So,
Yep. Yep.
um,
I do want to go back to what you said, like with margin compression and stuff. I feel like we should explain that to the people.
mhm,
So AVU is basically selling a lot more. They're selling product. The problem is they keep it less of that profit. Why? Because AI is so capitally expensive right now. Like they're spending a lot more on
correct,
building. They're not getting a lot more. They're selling more, but their profit margin is very, very small.
correct,
Right. And Wall Street investors don't like that. Like they might have priced them to be like the margin to be this high, but then they see the margin is a little smaller. Now,
correct.
if you think about it, the simple example I can give you guys is think about it back in the day when internet first started. It was expensive. Like only
Hmm.
certain individuals have internet, right? Not
Hmm.
everybody had internet. If you had internet back in the day, you were considered rich. You know what I mean?
Yes,
Um,
exactly.
but now you see the price of internet actually drop. Everybody has internet now. Why? Because
Mhm.
they found a way to create it, make it cheaper, make it faster, and make it also more expendable to everyone.
Correct,
AI is still in that arena where it's like it's still expensive to build. They're still building data centers. We're still trying to figure out energy. We're still trying to figure out the chips and how much it costs to make them. So all of those upfront costs are still happening. How long is
correct,
it going to take? Nobody knows.
correct.
You know
Yeah,
what I
same
mean?
thing. Same thing with, like, the cell phone and the personal computer, right? Like back in the
Mm-hmm.
day, I think I was watching a video, like they had a computer that when it first came out, it was like 10 grand.
Yeah,
10 grand, right? So only a few people could
can
afford
afford
that.
that. Yeah,
Now
yeah,
you can buy a computer for what, like 300, $400 now?
yeah.
So
You can buy
yeah,
me
I
for
think,
cheaper for that too.
yeah. So the build out of the AI, landscape will take time. It's gonna be a bumpy ride, but I don't think that it's going to be something that people are gonna like completely abandon.
Yeah,
So you just have to really be patient in my view. And to me, when you see some of these drops in some of these companies that are good companies, I would be looking at them and saying, is this an opportunity for me to start a position? So,
yeah,
you
yeah.
know, are you going to be rewarded for it in the next month or two? Maybe not. But if you look at the next, 2, 3, 4, 5 years down the road, I really think that, being patient will eventually pay off.
Pay
So,
off big time.
yeah. So
Yeah,
I
yeah.
would I would I would not let a day like this sit there and like spook you. This is a time where you need to sit back and start doing your research, because I don't think the story of AI is going to go anywhere. I think the question that we have is, how big is it going to be, and who are going to be the companies that are able to execute and make the most and take the most advantage of the production.
Facts,
That's
facts.
what you have to start to realize. Everybody's not going to be able to execute at the same level, right?
Nope,
You're going
nope.
to have your leaders. You're going to have some people who are going to get, left behind. So, we'll have to wait and see, what people report. But I
Yeah,
still think that AVGO's demand will
we'll
will
keep
still will
increasing.
still will still increase. I don't
Yeah,
see it tapering off anytime soon.
yeah, yeah. Well, let's pause the talk on the tech for a second, man. Let's talk about IWM, man. That thing finally hits all-time high. Now, this matters a lot because the Russell 2000, which is tracked by IWM, they don't just move on hype, right? They move on confidence because they are small companies that we talk about. So again, why this breakout is so important is because investors are getting comfortable taking risk again. They're starting to like diversify now. They're not just focusing on tech. Maybe they're going into growth. Maybe they're going into financials and all these different things. So some of those things are starting to move around. The money starting to move around. Now, the other thing to you guys are thinking about, and I saw it on an X today where President Trump was talking about who his next um, Fed chair is going to be. And one of the biggest things that he mentioned is he thinks the rate should be a lot lower, right? So I want you guys to think about that as we head into next year. We're in December now. The Fed chair, Jerome, I think Jerome leaving on April or May, somewhere around there, right?
Yep.
That month that Jerome is going to leave is going to be very, very important. Leading up to that is going to be very, very important because whoever is going to get that gets appointed by Trump, you know what they're going to do. You already know what they're gonna do, so you got to position yourself to be in a place where you can take advantage of that. So let's talk about this IWM move, man, because we've been talking about IWM for I feel like for the past year, talking about rate cuts and all these different things. But we finally broke to that all-time high.
Yeah, so the thing with IWM is if we look at how the market has been tracking over the last, call it 5 years. The last time IWM hit a high was back in 2021. I think it hit a high of 244.46. It tested that high last year, but it did not hold.
Yep.
IWM eventually traded all the way down this year to 167. And finally, it is now broken into an all-time high. So if you look at IWM compared to like QQQ or SPY, IWM has been the lagger. It has
Mm-hmm.
been the lagging index out
Yep.
of the three.
Yep.
And now that we're in a rate cutting cycle, it is really starting to break out. Now, IWM, because we're dealing with a lot of small, unprofitable companies, a little bit more volatile, right? These companies are
Yep.
still in their growth stage. They need lending, they need money to be able to grow. So we will see if the momentum will continue moving into next year, because I'm pretty confident, as you mentioned, whoever comes in on board as the next Fed chair, I'm pretty sure is going to be on board with continuing to cut rates.
Mm-hmm.
And that is a direct benefit to IWM and the companies in their portfolio. So we'll just have to wait and see. But I kind of like the trajectory. And this is what I always tell people, it's always good to have a good in your long-term portfolio, like your 401k or your IRA or something like. It's always good to have at least some exposure to small caps and international stocks.
Yep.
Because if you look at the international indexes, like the MSCI, international and emerging markets have outperformed the S&P 500 this year
Facts. Yep.
by a wide margin. But nobody talks about it on the news because they're not the big, the
It's,
Nvidias and the
it's
Apples
not
and things
sexy.
like
It's
it's
not
not
sexy.
sexy. And also, they have also been laggards over the last 10 years.
Mm-hmm.
So when you're building a long-term portfolio, like in your 401k and your IRA, where you're going to be invested for, 10, 20, maybe even 30 years, you always want to make sure that you have some exposure outside of the S&P. Because in years like this, where those asset classes start to outperform, you can at least be a part of that story.
Yep. Yep.
To me,
Yep.
that's very, very important to at least have, maybe a majority of your portfolio is in like the QQQs or SPYs. That's okay. But I would say anywhere between 20 to 30% should be split between IWM and international and emerging markets, because you don't want to miss out on years like this. I think the
Those opportunities.
MSCI,
Yeah.
I think MSCI is up over 30%.
Yeah.
MSCI is an index that tracks emerging markets. And I want to say it's up over 30% on the year.
Mm.
So if you were just in the S&P 500 by itself, you missed out on that performance. So it's always, always, always good to have some sort of exposure to those asset classes over time. So,
Yep. Yep. Yep.
but I'm happy because I remember a couple quarters ago, I increased my IWM percentage in my long-term portfolio by about 5%. So I'm actually happy that it's starting to break out. Got smacked today though, but I'm happy that I've enjoyed the ride. I actually need to go check what it's doing now. So
What the MSCI or which one?
My long-term portfolio. I just want to
Oh,
see what
long-term portfolio. Okay.
the performance is. So, but yeah, MSCI index. I think if you let me look at the proxy that I have. So MSCI, give me one quick second. I have it on
Yeah,
my
that's that thing.
listings.
That thing is up.
Let me see. Okay, so the iShares MSCI EAFE ETF. Actually, no. iShares MSCI Emerging Market ETF, EEM. That's my proxy. And if you look at year to date, that is up 30%. And if you compare that to SPY,
And they
where
haven't
is
even
it?
hit all-time high yet.
Nope. You compare it to SPY, SPY is only up 15%, and QQQ is up only 19%.
Yeah.
So you can see the outperformance. Yeah. So most, and I also think that a lot of the other, central banks like in Europe and elsewhere, they've been cutting. They've been more,
More aggressive with cutting, yeah.
more aggressive with
Supposed to
cutting.
hear. Yep.
So that is helping them a lot too as well. So
Yep.
diversification is the key to long-term success.
But I mean, I guess like I want to go back to what you were talking about, like IWM and and the move that it's making. I again the way you want to trade this, if you do like real day trades or whatever, we saw the market kind of sell off a little bit on IWM today. Now,
Hmm.
my thing will be to watch if the dip is going to get bought. So and be able to position yourself well in that position. So again, whenever we hit all-time high, if you guys look at the charts, you'll see like a company hit all-time high, it will pull back a little bit and then it will go back up again. So just keep an eye on that over the next few weeks here. So we shall see, man. You guys got to remember too, this is December, last month of the year. There's a lot of things happening in those big institutional companies and stuff. Like they're rotating money left and right. They're trying to figure out what they're going to invest in, with the new year and stuff. So yes, keep an eye on that to be able to make sure you take advantage of it. But let's move on to SpaceX, man. I've been hearing a lot of talk. Somebody actually did a whole analysis on X on SpaceX and if they're gonna go public or not. You know what I mean? So I mean, there's a lot of rumors going on. Nothing official yet. We haven't seen the S1. I don't know if you've seen it. There's no S1.
No, they haven't
There's no
filed yet.
ticker.
Nope.
But we keep hearing so much about this. So, I always say wherever there's smoke, there's fire. Like, somebody's doing some math on that, trying to figure out when is SpaceX actually going to be going up. So SpaceX, in my opinion, it's no longer just a rocket company, right?
Mm.
They have launched dominance. The stuff they're doing there is crazy with the rocket going up and coming back, saving money on not having to reconstruct rocket over and over. They have the Starlink that's generating real recurring revenue, not just in the US, but across the world. You know what I mean? They have government contracts in, they have global infrastructure. So it's not just a science project anymore for Elon. At this point, it looks like a startup. You know what I mean? And he has some fuel behind it. So let's talk a little bit about that because the valuation on that is like 1.5 trillion. I don't remember a company that had like $1 trillion valuation. I'm trying to
The,
think like
the only one was Saudi Aramco.
I don't even know what that is.
Yeah, so Saudi Aramco is the biggest oil producing
Oil.
company in the world. So I don't know what their symbol is. Let me see if they're listed. So when they IPO'd, Saudi, let me see.
Ramco?
Yeah, Saudi Aramco um, is the biggest public company.
Man. That
Just
IPO?
yeah.
That's crazy, man. But like 1.5 trillion and probably is gonna go higher too, because this is just numbers that's being thrown out right now.
Yeah. So $1.5 trillion, that would mean that at that valuation, I think Elon owns 42% of SpaceX. He's a trillionaire.
He's a trillionaire plus whatever
Plus he
goals he's
owns,
supposed to meet in Tesla.
yeah,
If
he's
he
a
meets
trillionaire.
them,
Yeah.
dang.
So, which is crazy. Another thing that I saw was that Google owns a huge chunk of SpaceX.
Oh,
Yeah. So Google Ventures owns, let me go back to my chart. Someone actually sent this to me. Let me see. Where is that? Yeah. Google Ventures owns 7.4% of SpaceX. Fidelity owns 10.2% of SpaceX. So those companies are going to cash out if they IPO. Wow.
They're taking their money and running.
Yeah, they might take their money and run. I don't know if they might still stay in and keep a certain percentage, but I wouldn't be surprised if they sold some of those shares.
That's crazy though, man.
Yeah.
So at $1.5 trillion and growing, I don't know, man. That's a lot of money, dude. Like that's a lot of money. And for one person to own like 42% of the company, who's basically has a controlling share, probably, you know what I mean? So it's like that's crazy.
Yeah, so Saudi Aramco is a publicly traded company, but it's not traded on any US exchanges.
Mm,
So from a US exchange standpoint, SpaceX will be the biggest.
okay,
But
okay.
Saudi Aramco, the majority owner is still the Saudi Arabian government. So
Of course, of
I don't I,
course.
I don't know how that works out, but yeah, they're not traded on US exchanges. But I think the biggest IPO on a US exchange was Alibaba, if I'm not mistaken. I think Alibaba's still the biggest one.
That is
So
crazy.
yeah, so if they go public and they get a $1.5 trillion valuation, that will blow out any highs out of the water for sure.
Like I don't know how do you even like how do you even reach that number? How do you justify that number? That's crazy, man.
So we got
That
to
is
see what the
crazy.
we got to see what the S1 shows because when you go public, you got to start showing your hands.
Yeah, yep,
So we got to
yep,
start looking at the revenue. We got to start looking at how much debt they've got. We get to see everything. So
yep, yep.
they might be aiming for a $1.5 trillion valuation, but if the market says you're not worth that, it might come down. So we'll have to just
Yeah.
wait and see because
But
there have been.
it but it will be one of its, a unique company to be on the exchange because the only other rocket company I could think of that won't like be a SPAC, which is like Virgin Galactic or whatever. You know what I
Mhm.
mean?
So I
But
think I think another one I don't know is Rocket Labs a space company, and then ASTS,
Rocket Lab probably is.
yeah, RKLB, and then ASTS. That
Yes,
is,
yes.
yeah, ASTS Space Mobile. I think those are also rocket companies as well. Yeah, those three are the
Okay.
ones that I'm
Space
familiar with.
Mobile. Yep. Yep. So we'll see, man, what happened to them when SpaceX
Yeah, we'll
goes
see what
public.
happens. Yep.
That's crazy, man. I still don't know how to justify that number, but I guess once they release the book, we can see what's going on.
Yeah. So we'll just have to wait and see what's under the hood because
Yep.
as you're a private company, you don't have to really just show your hand. You just need to show enough to get people on board. But as a
Yep.
public company, you got to show everything, right?
Yep. Yep.
So,
Yep. Yep. But let's look into next week, man. The only thing I'm keeping an eye on next week is the CPI.
mhm.
CPI is coming next week. I
if,
mean, we had a
if we get
if we get it,
it, if
it
we
keep getting
get it,
delayed. It keep getting delayed. So I don't know, man. We shall see. But apart from all of that, man, I think that's the biggest thing. I mean, of course, we have the labor numbers and all these different things, but the CPI number is coming out on Thursday next week. Hopefully, we'll get it. That's a headline inflation, so we can see exactly how the numbers looks like. Never know, man. That might be like, wait till next year.
because remember I sent you that text about PPI. They were like, we're not going to
Yep.
report it.
Yep. Yep. How do you even do that, man? It's like, oh, we're just not gonna show you the numbers. Like, wait, what? You
Yeah.
know?
So,
That's
and
that's
I
that's
and
crazy.
and another thing that Powell talked about was that we have to kind of sift through the data now. Like we got to start backtracking because we got some of this information kind of late.
Right.
So, but to me, with the unemployment trend that we're seeing and the layoffs, you got to start cutting rates.
Yep.
So,
Yep. Yep. All right, man. Well, do you have anything going into the weekend of into next week and see what's any feedback you want to give to the people as we head
yeah,
to next week? It's been like to the end of the year, actually.
the only thing I will say is, like I said, today was not a good day if you were bullish, depending on what you own, right? So,
Yeah.
Tesla was up today, banks were up today. I think energy was up today for the most part, but a lot of those.
UNH was up today too. I don't know if you guys seen that stock.
Let me see.
UNH it ran up today.
Yeah, UNH was up today. Yeah, so UNH has actually been up the last 3 days.
Mm-hmm.
So um, this is the time of year where again we could continue to see sector rotation away from the high flyers because again,
Yep.
something that outperforms, especially when it's by a wide margin. At
Mm-hmm.
some point, as a portfolio manager, again, I keep saying this, you got to take profits off the table and rotate them into other places, right? So we're
Yep.
starting to see some of that. I don't think it's going to be a long-term trend. So if some of these companies, especially good companies, right, present opportunities for you to get in at a cheaper price, maybe now is the time to start building a position in those companies. So again, you have to be patient. You have to understand that you're not going to get, you may not see the benefit right away, but with time and as these companies start to figure things out, I think when you look back, you'll be like, okay, I think I made a good decision. Now, I'm not saying you should go out there and start speculating because there are some companies where that are very still speculative. Like you go look at the quantum names; those are still to me are still speculative names. Oklo is
Mm-hmm.
still I
Mm-hmm.
consider a speculative name, right? So those are the companies that I would be okay if you're going to get into those. Maybe you just dip your toe into the water because those things are very very volatile.
Yeah.
So patience is required. But for the most part, I got to see when the Fed is going to start that bond buying program, right? And we got to see how the market changes, or if it
Change
does
with
start to
that.
change when they
Yep.
start seeing more liquidity into the system. So we'll see.
Yep. Yep.
But
Yep.
that makes me bullish, depending on when they start that program.
Absolutely.
Yeah.
Absolutely.
So
Well, with that being said, y'all, it's a wrap on today's episode. We covered a lot, man. So if you trade, please stay disciplined, man. If you invest, stay patient. I think we're going to see a little bit of market rotation here coming up, but don't pay too much attention to the headline, but actually watch the chart, man. Make sure you guys are keeping an eye on the chart and understanding, like, when things are happening in the news out there. Man, that's what we try to always, break it down to you guys so you guys can understand a little bit. Like, don't just take what CNBC is saying and run with that because you're gonna lose money.
yeah, like I said, you always gotta you can't. I mean, it's good to pay attention to what you're hearing on the headlines, right? But
Hmm.
to me, you got to take that. You can't take it at face value. You have to actually
Yep.
start doing your own research, and you got to also start doing, your own due diligence behind, the curtain.
Yep.
Like, we found RBRK back months ago.
Yep.
We had to wait until they reported their earnings. Next thing we know, the stock was up 25%. It
Yeah.
did pull back today, but when you take the extra steps to do the research,
You find some
you
gems.
can find some gems. So there's still
Yep.
there's still good companies out there. There's still a lot of good companies out there that to me, if you're patient and you're diligent, I think that you can find yourself in a really, really good position over the next, 1 to 2 years.
That's a
Now,
fact.
I always say this though, if we have any catastrophic issues that come up out of nowhere, the narrative can change. Like,
You.
no
Yep.
one saw COVID coming.
Yeah.
That changed the entire
That
narrative of the
changed
market.
everything.
That
Yep.
changed everything. So if the narrative changes, you got to adjust.
Yep.
So just keep that in mind. So
Yep.
at
Yep.
least for right now, things kind of look fairly stable. The Fed is on the side of liquidity. So we'll have to take that with a grain of salt at least for now. But if we start seeing like maybe an inflation spike, private credit crumbles,
Yep.
commercial real estate crumbles, the narrative flips. So then
Start
you got to
changing.
you got to adjust.
Yep.
Yeah.
Yep. Well, with that being said, I'm your co-host, Billy. I got Wale with me. This is the Wall Street Rundown. Hey, stay sharp, stay informed. We'll catch you guys on the next episode. Have a good weekend, everybody. Peace.
All right, everyone, take care.